Guys, it is time for the truth, and I can already tell you I closed out all of my swing long positions recently. I will tell you in today's video exactly why I did that, since we opened them so beautifully at and below the $20,000 level last year, and we perfectly only used a 3 to 4x leverage to keep our liquidation price below the $14,000 level, because as I said it so many times before we reached that bottom, $14,000 to $16,000 will be the bottom for Bitcoin, and this also happened. Now our swing long positions were doing amazing gains. I didn't scale them up as much as I did with my swing long positions in the last bull run. I will also tell you why I didn't do that, and especially why I closed them now. It will be the full truth actually. But before we talk about this now, I want to give away a few $100, actually over $1,000 to you guys, to all the active viewers that are now watching an upload once again after such a long time where I haven't uploaded a video. And guys, the block halving, the Bitcoin halving, is only 791 blocks away. And for that reason, and us also reaching a new all-time high a couple of weeks ago, I will be giving away $1,500, $500 to 3 people each. And guys, if you want to win, all you have to do is leave a comment down below with your USDT ERC20 address. Then you can already win. Besides this, you don't need to do that to win. I would always appreciate it if you would smash up a like, don't forget to subscribe and activate the bell. The winners will be drawn live at the end of my next video, with also the money being sent out live to the winners. But now, as said, let's jump into the charts, because for this whole run-up, a lot of people have expected that the Federal Reserve would start cutting rates during this year and we would see more liquidity in the markets by lower interest rates. But this actually did not really happen. We only saw a very slight lowering, and right now people are actually expecting that it might not get lowered at any point during the year of 2024. And that means that there's not much liquidity coming into the market from lending, at least, which is not so great, because this normally boosts all the stock markets, cryptocurrency, whatever it is, if there is cheap liquidity available to borrow on the market, which is it not right now. But guys, we have seen something very interesting in combination, and that has led to the decision of me closing out all of my swing long positions. It was already a while ago, it was 4 weeks ago to be exact, so we were at similar prices. We were a little bit higher when I closed out all of these trades. But now let me tell you why I did this. Because if we are taking a look at the entire cryptocurrency market as a whole at the moment, we have seen an insane run-up. The cryptocurrency market capitalization almost 3x, or 3x pretty much from the lows. In the same time, from the same date ongoing, the USDT amount available in the market only increased by less than 50%. So we can already see that the USDT market cap doesn't grow and correlate with the growth of the entire crypto market cap. Why is that? That is because a lot of people in the bear market, right, keep their USDT on the sidelines. That's why in a bear market the total capitalization drops a lot, but the USDT capitalization doesn't rise a lot, right? But now people are putting in, since the run-up has started, a lot of their USDT into cryptocurrencies, and that's why the USDT market dominance in percent is falling low. And we can see that the cryptocurrency market are growing by the year, because there is a significant increase of the percent that the USDT market capitalization holds in comparison to the entire cryptocurrency market capitalization. So if the USDT market cap grows, this shows us that during bear markets, not as many USDT are being pulled out of the market again back to full fiat compared to the amount that was put in. So this actually means that our market is increasing because more and more people are trusting to leave their fiat currency just in USDT, and also these people are long-term people that are interested in Bitcoin because they want to have their money ready again to buy back cryptocurrencies at the right time. But what we have seen now is that the ratio between the market capitalization of cryptocurrency in general and USDT has not really risen accordingly, but we have seen a very steep and aggressive fall of the USDT dominance. This actually means that a lot of the USDT supply that was sitting on the sidelines for people to put into the market during the next bull run has already been mostly depleted. So the only reason that we see any more highs at the moment is for outside capital. So with the Bitcoin ETFs or actually new people buying in, because the people that were waiting on the sidelines, most of them are already in. And we have also seen massive FOMO occurring in the markets already on Twitter, people talking about the next 1000x coins and stuff like this. So that might be a small warning signal as well. But coming back now to the USDT dominance, every time in the past we have seen USDT retest this stable growth support here for all of our past bull and bear cycles and also smaller and bigger corrections in the market, we have reached this support again and we are bouncing here at the moment. And after every retest of this support, we normally see a significant correction with the Bitcoin prices. This red arrow represents this green arrow. As we can see, it's signaled our exact current top. These two red arrows, they signal these two green arrows, as you can see, November 21, November 21. Let's take a look here. April 21, April 21. Both of the times, again, it perfectly signaled our tops here, even in the past. Before the Corona dump, when we see a run up, we saw here the top potentially coming in. Boom, confirmed. February 20, boom, we see the price returning to the downside. Also here we have a nice rise to the upside. Boom, we touch this growth line once again over here. And we see another correction and so on, even with our old last all-time high, not in the last, but in the bull run before that, in the 2017 one. And on top of that, we have a lot of resistance coming in here. We have the 11-year support and resistance now here on the monthly coming in as resistance. We have our two old monthly candle highs, yeah, from our past bull run, connecting here beautifully to a rising resistance that we also just retested and got rejected from. So there are a couple of bearish signs coming in. And this was the reason why last month, actually, when our funding fees were so extremely high, I decided to close all of my trades. Now looking back at it, it was not the optimal decision to close out everything because we had 2 weeks during that time frame where we had insane funding fees. As you remember when we scaled up our trades aggressively here in the last bull run, I had live streams with my $20 million trades and stuff where we paid $100,000 in funding fee each and every single day, sometimes even more, which was crazy. It ate away a lot of the profits that we made. If we immediately closed here, we could have saved a lot more profits and done a lot more profit actually in the last run up. So when we saw this now, and I knew that the potential of a little bit of a bigger correction is not too small because it is not unlikely that we are going to retest our 11-year monthly resistance that was confirmed as support in the last bull run, potentially here as support once again before we can actually reach our final destination for this current run somewhere at the end of this year or beginning of 2025. We could expect a retest of this monthly support here for sure. So we have a lot of resistance. We didn't have a big correction so far in this current move. I mean, last time, right before the halving here, we also started correcting to the downside. We corrected during the halving all the way down to 38%. That was happening also before one of our halvings. So it is not unlikely that here potentially with the halving now coming up very soon, we might also start into a small correction that will continue to ride after the halving, maybe bouncing here at the $50,000 level at our monthly support. But I have to say that back in March, it was unclear how long the funding fees will stay as high. I was thinking about the scenario that potentially we see a sideways movement here for a couple of months. Maybe we even go up to 80K for a short amount of time, or we even go higher. But the problem would have been that my funding fees would have stayed the same. And if I would have risked that we are going sideways or maybe even correcting, and I would have kept my positions open for a month, 2 months, 3 months, again, like last bull run, and the funding fees would have stayed at such a high level, then they would have eaten away a large amount of my profits. So as I always say, taking profits is never a bad idea. If people always, the people get it mixed up a little bit. If it's the bear market, the people are always thinking about, okay, when is the bottom finally going to be in? When is the price going to reach this unlimited low point? The same as when we were calling for the 16 to 14,000 bottom here. People were saying, oh, we might go to 10K, they never bought. If we are in a bear market, just every day buy a little bit. The same way, if we are in such an amazing run-up as we are right now, just start taking profits step by step. Cost averaging doesn't only work when entering a market, it also works when exiting a market. So what I have done here is just say, okay, I have my HODL portfolio, all the profits that I took off these positions, I put into Bitcoin and Ethereum once again. So if the price moves up, it's fine, but I'm not exposed to the risk of the funding fees depending on how the price continues moving now for the next 2-3 months. So this is why I closed out all of the trades. And on top of that, I have to say it was not only that, I also wanted to take a small break from YouTube and also from trading. As you guys know, at least my German viewers know, the English channel that I have here is not that old. I'm doing crypto YouTube since 2017 on my German channel. I have been in cryptocurrency since 2016. I've been actively trading on social media on YouTube since 2018, so for a very, very long time. We had an amazingly stressful 2021 bull run. We had an amazing start into 2022, where, as you guys remember, I did the $50,000 to $1 million challenge, where I shared every single trade upfront in my videos for a period of 3 months, and we traded an account from $50,000 all the way up to $1 million. I also shared that account live in my videos and everything like that. So that was amazing. But the pressure was up, right? We had a crazy bull run. We had a crazy start into the bear market. And every day I upload a video, right? I have in the back of my mind, especially when I'm doing trades, okay, I want to make sure that this trade setup is as solid as possible. So the likelihood that this is a non-profitable trade is the lowest, because all of my viewers might join in on the trade if they like the analysis. So I want to make sure to always deliver the best trades that I possibly can. That's why I also don't upload a video every single day talking about a new trade setup, because I myself would not even trade that frequently all the time, right? So I don't want to create trade setups just to make a video. I think this is a very bad idea and will lead to unprofitable trades and to not so nice video suggestions from my end. So the pressure was very high, and I have to say I should have already taken a break in 2023, maybe from some videos and from trading for a moment, just to pretty much not have that pressure always on me. Because yes, if I don't upload YouTube videos and I just trade privately, that's not really that difficult to me anymore after such a long amount of time. And also uploading videos about it is not so difficult. It just makes the pressure and the time I take for analysis and so on a little bit to a next level. Let's just say it like that. And yeah, so I decided to just take a 4 months break now. I thought we played the bear market quite well. We all have our swing long positions open. Everyone knows my game plan, and I can just take a break now. Everyone is just enjoying the profits anyways. And now, when it got important again, I'm back here anyways with a video once again. So now guys, I hope you enjoyed. We will definitely go into the smaller time frames in our upcoming videos. So make sure you smash up a like. Don't forget to subscribe, activate the bell, and also leave a comment down below, especially in today's video, because we are giving away $500 to 3 of you guys out there. So make sure you comment your USDT ERC20 address below so you can win, and you watch my next video, because at the end we will draw the winners live and also send the prizes live in the video. So we are going to see us there. Good luck, and thank you very much for joining after such a long time once again. Bye bye guys.